Getting so many requests for Kadena, so here we go, a breakdown of Kadena. Things are getting volatile in the market, and I've got a little friend that's not leaving me alone today, so let's dive into Kadena. And we're starting to build a bit of a Kadena army on the Crypto Bullseye channel, so let me know in the comments if you do hold Kadena, and let me know what price you got it at, because there's two things that you need to be thinking of. Firstly, from a trading perspective, are you looking to be in and out of the market, or are you holding for dear life? Are you one of those hodlers that thinks Kadena is going to go to the moon, make you a millionaire, and then you're going to live a happy life on a beach somewhere? Because if you're new to crypto and you think that's going to happen, unfortunately, you need to prepare yourself for both scenarios. And that's what this video is going to be about, preparing yourself for both scenarios. Now, as far as the daily is concerned, we're on Kadena on the daily. We expected this bullish pennant. I said in the last video, we're likely to form a bull pennant. So that's what's happening now. The psychology behind a bull pennant is you create an indecision. There's a battle between the bulls and the bears. There's a tug of war going on in between this pennant. And I'll show you what I mean. If we zoom into the 4-hour chart, we can see it a little bit clear. Each one of these candles now represents 4 hours of price action. So what we're going to do is we're going to add in our trend lines from the wicks. I'm going to tell you why we're doing it from the wicks to the bottom. Right, the reason why we're using the wicks is because if price action breaks out and you're looking to take a trade on the break of this is what would happen if you used the bodies. You would have been faked out, faked out, faked out, faked out, faked out. So the method in our madness by using the wicks, and it gives you a higher probability that your move is actually the correct move. Now, how am I going to play this? So remember, on the 4-hour chart, we want to break to the upside if we're looking for projections to the upside. And if you are looking for projections to the upside, you need to know where we're wrong. And that's how the pattern can play. And that's how the pattern can tell you whether you're right or whether you're wrong. We're breaking to the upside or we're breaking to the downside. It's as simple as that, guys. And you can use this as your protection level. You can use these as your stop losses, because this was our previous resistance, this horizontal. $1.43 was our previous resistance. And we need this to act as support going forward. And just an example, look, we broke through, we've come back down, this has acted as support, and then we've had a push to the upside. That's positive. It showed it's acted as support once. Now we need it to act as support once again. So if we're wrong and we break to the downside, remember, we're not always right. This is just whatever the market does. The market will do whatever the hell it bloody wants. And all we can do is make projections based on what the charts are telling us. And if we can get an edge on this, then the community is happy. So if we break and close above, this is what we want, a break and a close above. We want a candle to close above here. Candle close on the 4-hour. Then we want a retest of this area here. This previous resistance wants to act as support, and then a projection to the upside. We can try for the bullish move. And the bullish move, we've got targets sitting at $2.34 to $2.43 to the upside. Now, how do we prepare ourselves if we're wrong from a trading perspective, from an investment perspective? Either way, you need to lock in your profits along the way, guys. And if you've got all your eggs in one basket, it is a recipe for disaster. So spread your portfolio accordingly. And if you want me to see videos on how to spread your portfolio, let me know in the comments and I'll be happy to cover them. Right, if we're wrong, we're breaking to the downside. So you're going to get a nasty candle wick. This is going to come back. It's going to reject. Going to come back, the bulls are going to have a try, this is going to reject, and then we're either going to hold this as support or we're going to fall below. This is going to act as resistance. We're going to lose the 4-hour moving average, and then we'll be moving back to lower levels. So that's how we can prepare ourselves for either side. We're waiting for a breakout to the upside or waiting for a breakout to the downside. And to try and make this as simple as possible for you guys, by understanding a price chart, I promise you now, this is going to be one of the most important things you will ever do in your life, because it helps you understand whether something's fair value. It helps you understand whether something's overbought, oversold, what's a good entry, what's a good exit, how you can use the appropriate risk management, how you understand how much capital that you're willing to risk. Preservation of capital is the key, and that's what I'm going to keep drilling home to you. So don't forget, if you are part of the Kadena community, let me know in the comments below, what price did you get it at? Have you protected yourself? And do you think that we're going to go to the moon as far as Bitcoin's concerned? Do you think Bitcoin will hit 100,000 before the Bitcoin halving? Here's my take on it. Let me know what you think. Bye for now.